Hey, crypto family, thanks for being a subscriber to the Engine Room podcast. Wanted to just share a little clip from today as opposed to a full conversation. With market conditions being what they are, we wanted to get Bill to basically let Bill pick the brain of these guys who run a fund, and it's approaching a DAO format. It's not actually finished yet. In its finished format, it will be a DAO. So please enjoy this conversation today between Bill and some pseudonymous hedge fund guys, basically.
All right, gentlemen, just a quick course change. Since you guys are an investment fund, even though that you're like pseudo anonymous, what do you guys think about what's happening in the market right now?
Do you want a short answer? I have a lot of opinions based on what's going on right now.
Yeah, man. No,
Obviously,
let it fly.
Most
Let's
of our
talk about the
audience is
market.
retail investors who would probably really appreciate your insights, I'm sure.
absolutely. So, look, I mean, Bill and I talk about this hours a day. We're talking about what's going on in the markets. Look, I think what happened right now in Ukraine and Russia has, to some extent, actually proved to be somewhat of a positive for crypto. Obviously, as we've seen that NATO nations decided to block SWIFT. We've seen a kind of a rebound. Personally, for me, what fundamentally still is concerning to me is obviously as the Fed starts to raise rates. I know they're supposed to technically raise it this month for the first time. It looks like a quarter basis point. Um, it's interesting. The Russia situation is seeming to be, for now, almost a positive on the markets, and we've seen equity markets in the U.S. Um, and crypto kind of rebound, right? Which is kind of counterintuitive, but I think what it is what's going on right now in Russia is an issue for the Fed. They can't raise two step ups, which was, I think, was 0.5%, which was the goal. So now they're lowering that to combat inflation. So it's interesting what's happening. I do see it as a positive for crypto, just because people are realizing, like, hey, governments can literally shut down your bank accounts. We saw what happened in Canada a couple of weeks back, where they just shut down everyone's bank account that was contributing to the protest. So I think crypto is getting more and more appealing from an actual utility point of view, not only just the hype that we saw last year.
Excellent. So, do you guys, do your market analysis like, kind of off the cuff, or in other words, do you guys look at charts? I mean, what do you do? You watch CNN? What kind of stuff are you looking at?
Me personally, I look, I like I said, I worked on Wall Street, so I read the journal, Wall Street Journal. If I'm watching like TV related news, it'll be CNBC or Bloomberg TV. Um, Listen to what the talking heads have to say in regards to what's going on, and generally that's pretty helpful. But I try to look at mainly like Wall Street Journal in terms of what they're talking about from a macro point of view, and then I'll have a few different outlets that I use to see what's going on within the crypto space, because there's just so much going on. It's impossible to keep track on all the different projects.
All right, so you and your colleague are like market buddies. How much time you spend talking about the market? Talk every day. You know, Tell me about those
Pretty,
discussions, like back and forth. Like,
yeah,
do you
pretty.
guys agree on the view?
We have extensive conversations, especially lately, to the point where we actually decided that we have such great conversations that we kind of wanted to open it up both to our community and the public. So we actually are now hosting Twitter Spaces sessions bi-weekly, where we essentially have these open conversations, discussing the latest on sort of the macro and micro environments, all things that kind of impact and affect what's going on in the crypto space, and we have these sessions on our Twitter, on our Ape Fund Twitter, where anyone can join, contribute. We open it up for conversation and essentially, have an open conversation, really.
All right, so here's a question. So, I have kind of a controversial view that kicking the Russians out of SWIFT, while it appeals to your emotions, it may not be a great idea. Now, it does help crypto, but how do you guys feel about how this whole idea where large numbers of people are experiencing currency devaluations, right? I mean, is it good for crypto, or is it a bad government decision that leads to another bad government decision, which is regulators giving crypto the evil eye? Have you thought about it that way, or have a view on that?
Yes. That's my biggest concern. I think short term it is a positive for crypto. Longer term, it is concerning, because I do think that, okay, if we do see that Russia, and if we confirm that Russia is, oligarchs are funneling out billions of rubles or dollars into crypto and buying Bitcoin, what's going to happen is, and we're already seeing that happen, where countries are going to centralized exchanges and trying to shut them down. So far, they've pushed back. I was reading, I think it's Coinbase and Binance have pushed back so far. I read, and this is obviously unrelated to what's going on in Europe, but just to show you how things can change overnight, I saw that MetaMask has been banned in Venezuela as of a couple of days ago. And that's where you start to really question, decentralized versus centralized. How is this going to pan out for crypto? We already know the US government, the SEC, they're all looking into how they can regulate it, how they can tax it. My big concern, kind of to what you alluded, is that if we do see this cycle longer term, they're just going to come out with swifter regulation that's going to be potentially detrimental to crypto. It's somewhat of a contrarian view, somewhat bearish, but that's what I think is going to happen if we really are seeing all the oligarchs getting out of the Russian ruble and the US dollar and going into Bitcoin or whatever other cryptocurrencies.
Okay, last one. Do you guys have, like, in the best case scenario, an upside target in your head, and worst case scenario, like a downside target in your head? Like, try like Bitcoin and Ethereum. Like I know I'm not asking you to forecast the weather, but do you guys think about levels at all? Like, what's value, what's cheap, what's expensive? Where will people be exhausted? Anything like that?
Right. That's an interesting question. I do have some very lopsided estimates on Bitcoin, in terms of where I can see it going, longer term view pictures, but it's more difficult from someone coming from more of an equity analyst role, where you're analyzing actual companies that have fundamentals. It's much more different to analyze something that theoretically has no intrinsic value, right? I mean, just like gold theoretically doesn't have an intrinsic value, but we value it as people. So it's difficult to do that when there's no cash flows. With that being said, technicals are very important. Obviously, fundamentals in the sense of what's going on right now becomes very important for Bitcoin. I can tell you on my personal analysis, upside, I would definitely see Bitcoin getting at par with what we currently value gold at. I mean, I know this is something that's not revolutionary. Most people already made this sort of analogy where it's like, okay, if Bitcoin is really going to be the digital gold, it should have a value, if not more than what gold is currently valued at. So I would say that's where it is. And if I remember correctly, it would equate to about $400,000 more or less per Bitcoin based on the total supply. Downside risk, I've analyzed the previous two bear markets back in 2018 and 2014. And what I saw was we had a drawdown or a bear market that lasted for roughly 400 days. And generally the drawdown was about 87%. 87 to 82%, I believe it was. And based on that, based on what we hit our all-time high of 69,000, that would mean Bitcoin would go back down to roughly $10,000. I know that's a very bearish scenario, but just based on the previous bear markets that we've seen, if we are going into a bear market, if we're not already in a bear market, which some can argue, that's what the target is based on what we've seen happen the last few times.
All right. Thank you very much. I appreciate that.
So from all of us at Token Metrics, thanks for tuning in, and we'll see you next week with more analysis and interviews. Thanks for watching and listening to the Engine Room podcast. Bye-bye.